Today's penny stock tip of the day. I'm James. I review stocks. Try to find one every day that I like or find interesting enough to tell you all about. It's just new information, new ideas. Like and subscribe, and I'll show you a new one whenever I get a new one on here that I find interesting. I don't really do penny stocks. The reason is because they're usually fake companies, and they're usually going out of business, and there's all kinds of reasons to hate penny stocks. Very risky, and usually you lose all your money or half your money real quick, and you never get it back. And for that reason, I don't like it. But there is one kind of penny stock that I do like, and that's what I call a real company penny stock. When real companies hit this zone, you have to ask yourself what happened. Why are they still in business? Are they still functioning? How much money do they do? Stuff like that. And if you get good answers to all of those questions, then you can look a little further at it. But if it doesn't pass the first smell test, this one's at a whopping 5 cents. That's unbelievable. This is a 5-year chart. Look where this thing has been. $300, $400, $200. It just fell off a cliff. Let's look at the 1-year chart. In just a year, we were at $10, $11, $15, and then down, down, down. Heck, 6 months ago, we were at $5. And we're 5 cents. So what happened? This company's chaos, clearly. What if I told you this company was still in business? What if I told you they do $1 billion in sales every year? What if I told you they're a technology company? They actually sell the little terminals that you swipe your credit card at when you go to the store. They program their own devices, and they have specialty custom products for certain businesses. Right now they're entering hospitals. They have got terrific growth in the hospital terminals. Actually 13% year over year improvement with that. They got a new CEO. They fired the old guy. They got a new guy in last year. 2023, it's supposed to be a big turnaround. They lost $50 million last quarter. And they sold an asset and got $60 million. That's how they paid for it. They also issued stock a couple of times. I think they have 122 million outstanding shares. It's a lot, but it's not as many as some of these companies. 30 million, I guess, is normal. 122 is a little excessive, but still, 15 cents, that's fine with me. On a comparative purpose, but most importantly, they do $1 billion a year. They're in an industry that has a potential for growth. They're not in a dead industry. The little terminals are going to be here to stay. They have over 4,000 customers worldwide that they service. They have an absolutely ridiculous number of employees. I think they can fire about half of everybody and be in the black. This is one of those particular situations where you're like, all right, well, if you've got the books in front of you, and yes, it looks like crap, but there's some stuff we can do here. And they always do that stuff before they close the doors. You're going to fire everybody that you don't really need. You're going to get rid of everybody that is just dead weight. A lot of these companies, they end up with 30,000 employees or 10,000 employees, and you wonder what they're even thinking, or what these people are even doing. They should be selling their product. They should have a sales staff, and if they're lucky enough for their sales staff to be that big, well, good for them. But whenever you get over a couple of hundred for your support staff, yeah, you're spending too much. Your offices are too big. You're just hemorrhaging money, and this is clearly what happened to these people. They were starting to do billions of dollars a year, and they probably went and bought their own building. But you know what? They're going to sell the building. They're going to cut the staff. They're going to get rid of 5, 10,000, 20,000 workers, and they're going to make some headway, and they're going to stay in business. They have enough cash to go another 6 months or a year already. They have sales that are actually improving. They lost 60 cents per share last quarter. They're supposed to be break even in 2023 again. There is hope. I'm not going to say that they're going to make it, but there is hope. There's still a lot of cash coming in, and there's a good margin on that cash. And they're just doing horrible things with it. But like I said, they'll eventually have to stop doing horrible, stupid things. Eventually, you have to tell people to go home. Eventually, you have to give up the fancy offices. Eventually, the company cars go back. And there you are. You end up with a company with a decent balance sheet again, and the stockholders are happy. It happens. Would I buy much of it? No. Would you spend $50 and grab yourself 1,000 shares? That might be a good idea. I don't know. What if this thing comes back to $20? What if it comes back to $10? Would it be nice to have 1,000 shares for your $50? That'd be pretty nice. I don't know. See, bets like this I like to take. Because I know they got real business. I know they got real offices. I know they got a real website. I know they're real. Their terminals are out there. They have 4,000 customers. So there's a lot of stuff to consider with penny stocks. But for me, those are the big ones. Are they closing the doors, or are the doors open? Are they bringing in the cash? And they are. They're just doing dumb things with it. And they have horrible balance sheets. You should take a look at it. It's called XELA. And we'll scroll up here. Exela Technologies. XELA. It's a NASDAQ listed stock. They're listed as insufficient, I think is what NASDAQ is calling them. When their stocks fall below $1, they get automatically labeled that. Nothing to worry about. It doesn't mean that they're not filing or anything. In fact, they just got done filing 3 months ago. You should go read the report. It reads like a horror story of stupid people that spend money on a bunch of things that they shouldn't be and have way too many employees for what the company is. But they do have a solid customer base, and like I said, billions of dollars that's a lot of cash. A lot. You find something to do with it there. And then they got a few growing sectors to their business. And I think they have some hope. So check them out. Here's your stock tip of the day. There'll be more coming. Like and subscribe. Thank you. Have a great day.